Hey, what's up, Market Moose? My friend the Moose on the Loose. I hope you're doing well today. I thought a lot about recording or not recording this specific show about MSTE, so Arvest Micro Strategy Enhanced High Income ETF, so MSTE.to, because I did one explaining how it worked and why it was down throughout summer back on September 10th on this very show. So you can either listen to this one on the Moose on the Loose, or you can go on YouTube, watch the video, and also see all the comments. Like half of them were positive, the other half were just basically telling me that I'm stupid. I don't know what I like. I don't understand anything about covered call ETFs and whatever. And on top of that, I did not even issued an opinion on this one. I was literally explaining that when an asset, regardless if it's a covered call, a stock, or a mutual funds or whatever, when an asset goes down, it's important to understand why it's happening. So if it's a stock, for example, it could be because there are bad performances. And I'm not talking about a stock price, but like bad earnings. I just recently reviewed Waste Connection yesterday, explaining you that the market was expecting better results. It's not happening. It's disappointing. And therefore, since the stock is already priced at a very high PE ratio, it's only normal that the stock has a bad time. So it's important to be able to explain what's going on when it's going well and when it's not going well. So this is what I did in the first place back in September. And I explained that if the Bitcoin was going to be relatively stable, well, chances are MicroStrategy, the company, will not do well. And the reason is quite simple. MicroStrategy is a leverage play on the Bitcoin. So it absolutely depends on the Bitcoin to go up to generate positive cash flow. If it's not happening, if the Bitcoins remain about the same, then you are in trouble. Well, Bitcoin remained about the same price over the past 6 weeks. And guess what? Well, MicroStrategy stock price declined, which is totally normal. This is exactly what I told you would happen if the Bitcoin goes stable. And full disclaimer here, I don't know where the Bitcoin is going to end up. I'm not a Bitcoin raving fan. I have like a small portion of ETF in Bitcoin just for the asymmetrical risk, but really not because I think it's going to blow up to like $500,000 tomorrow morning and I'm going to be rich. And here's the thing. I have no clue. You do not have a clue where Bitcoin is going to end up this year or next year and then 5 years later. You can believe something, but let's not bet your wife, your husband, and your 3 children on that, right? Because we have no clue where it's going to happen. But again, MSTR was down while Bitcoin was stable. And then what happened with the Arvest MicroStrategy Enhanced High Income ETF? Well, it got down too. I mean, to be fair, it was down 10.6%. I'm talking total return here, so I included distribution in there. So don't tell me, but there's a distribution, Mike, on the side. Yes, I know about that. So down 10.6%. MSTR was down 11.45. So the covered call strategy shows you that when an asset goes down, it will act as a small buffer. So you're losing a little bit less, a little bit more than 1% less, which is a pretty good cushion. Still losing, but at least it's less than having the asset, which is totally normal because you receive some premiums by writing those covered calls. But now, MicroStrategy, and not MicroStrategy, but Arvest announced the MicroStrategy distribution that went down from 55 cents to 45. Big surprise. I kind of told you as well, that's what's going to happen. It's only normal that if the underlying asset is not positive, the covered call strategy on a negative asset will eventually lead to distribution cuts. There's no other way it could end up. So what I want to highlight here, because that is just one covered call ETF, and that's like on a highly speculative play. I'm sure a lot of people that bought MSTE knew about that. They were comfortable with the roller coaster. So it's probably that in 6 months from now, I mean, not probably, but maybe in 6 months from now, we're going to see the entire Bitcoin narrative going back up, and then you'll see like MSTR, MSTE going back up as well, and then there's no problem. Maybe it's going to happen, maybe it's not, but that is called investing with conviction, which I actually I have to applaud, because this is what I prone on my side. This is what I try to do: invest with conviction. So if you have that conviction into Bitcoin, into MSTR, MicroStrategy, buying the covered call ETF, all right, I totally get that, but I just wanted to show you that your distribution is far from being safe. And this is valid for any other leverage covered call ETF. If tomorrow morning we beginning a market drop that eventually turns out to be a bear market, well, most of the covered call ETFs that are using leverage will eventually have to cut a portion of their distribution. So I hope that you have understand that. And when you think you're going to be making $80,000 in distribution income next year, that 80,000 could actually be 85, 90, or 50. Like, very, very possible. And here's the thing. Yes, if you invest in dividend paying stocks, you can suffer dividend cuts. I've went through that experience, bad experience, a few times. Totally makes sense. But the thing is, when the market goes down, it's not going to necessarily trigger a dividend cut, but it will trigger a distribution cut from a covered call strategy because of how it's built. It's writing call options, so looking for people that wants to buy something at a higher price. Well, if the market is in the bear market going down, you can imagine that you're going to have a lot less investors interested in paying a higher price for something that is declining. They will be interested in buying it maybe, but not at a higher price. That doesn't make any sense. They will not pay you $2 a contract to buy something at $25 when it's right now trading at 20 on the declining trend. And there's a lot of financial metrics or narrative telling you that there's a good chance that this asset is going to go from $20 to 18 and so on. What's the point of paying an extra $2 to buy it at $25, right? Not making any sense, not going to generate a lot of income if you're using a covered call strategy. So going back to MSTR, MSTE, and all that stuff, my point once again is to know what you own and why you own it. You shouldn't be surprised to see that distribution cut. I mean, we had one before. It's obvious that another one was coming, and not because I can forecast the future. It's just that if you see that the asset is not going anywhere, the distribution will have to be cut at one point or another. It's just a matter of time. When you look at companies, we can be in a bear market, but a lot of companies in bear markets still increase their dividend. Why? Because the business is still running. A company that will cut its dividend will show weaker revenue, weaker earnings, and then it totally makes sense to cut the dividend, right? But if the stock price goes down, but the revenue keeps on increasing and the earnings per share keeps on going up, do you really think that they're going to cut their dividend? That has nothing to do with that. So if you think about Waste Connection, for example, that I recently covered, revenue growth was positive, earnings per share growth was positive, dividend is increasing by double digit year after year for a while. Do you really think that if we go into a bear market next year, while the stock price is already being depreciated right now, Waste Connection is going to cut their dividend in 26? Of course they won't. They would if the revenue and the earnings would dramatically start to fall down, but not because their stock price is going down. Same thing with Canadian National Railway. They have plenty of money right now to pay the dividend and increase it. They still have a lot of room, but the stock price is not going anywhere since the past, 2 years. So just make the difference between a distribution and a dividend, between an ETF and a stock, and between a leverage covered call and a global ETF that just invest in the market passively. I'm sorry, guys. I had to do it. I had to let it out because it's so important to see investors understand what they have in their portfolio. I have nothing to sell you. I'm not going to sell you a stock. I'm not going to sell you an ETF. And I'm certainly not going to sell you a covered call ETF. I just want you to understand what you have in your portfolio so you can make better decisions. So, right, Moose, that's enough for today. I promise I'm not going to tackle MSTE again for anytime soon. Just wanted to highlight the mechanics, how it works, and mostly because I received a lot of hate, I thought a lot of people don't get it, and I just wanted to show them how it works in a better way. So, right, Goose. So, right, Moose. We're going to talk again tomorrow, and until then, don't forget to stay invested.